Good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Sunday, April 16th, 2023. The opening of Globex for both the S&P and the NASDAQ showed both markets gapping a little bit higher, with the NASDAQ actually moving to a new high for this particular sequence, and the S&P still holding below 4177. And we got above that. If I remember correctly, we did get above it on Friday. We only got up to 4177 yet again. And then on the Globex today, we get up to 4174. So the market still can remain, starting here with the S&P, the market can still be within a triangle pattern. And again, I'm going to have to reverse this so they show it correctly, that this A would be at that June low. And then we'd have an A, a B, a C, a D, and we're in the E wave, where this would be A and B and a 5-wave C to complete the move. And within that fifth C wave, we were in 1, 2, 3, 4, and inside the fifth wave. Now let's bring that down and take it right back down to the hourly chart, which is a little bit more difficult because the pattern just shows a lot of noise here, down putting in a low on Wednesday at the start of Globex, and that kind of produced the fourth wave. So that all kind of fit in and concluded this was wave 4. Then through Globex into Thursday, we rallied pretty strongly. And again, came up to retest that 4177 area. And then we came back down. And then on Friday, we had retail sales and the bank earnings. We had both JP Morgan and Citigroup report decent earnings, but with some oversight as to what they believed would be coming. Now, so the market ran up to 4188, which was that next resistance zone, 4189 to be exact. That was the next resistance zone. If I go up a little bit further, I can see that the triangle pattern still sits at about 4200, 4199, 4200, right in there. And I would suspect that if it's still a triangle, then what we have is A, B, 1, 2, 3, 4, and we're inside that fifth wave. And within it, we may have one additional small rally left. Now, here's the catch. Again, in the triangle pattern, let me go back out to the 4-hour chart. Remember that within the triangle pattern, what I did before in a rush was that leaving the A wave here, it can't be counted as a triangle, even though it still looks very much like a triangle, because that would be A, B, C, D, E, and wave C far exceeded the top of wave A, and it should be contracting or diagonal, contracting here. So, and that's the case, it's not contracting. So I mistake it that I did it there, and that was due to the other triangle pattern that I had left that up as. So again, by moving this over to there, then yes, I can have A, B, C, D, and then we have an E wave. Now, that being the case, the triangle pattern remains valid, but now it cannot exceed 4250. And because that would be the top of wave C. And then I would not be looking for it to go above that endpoint for wave C. And then this being D. Now, even if we use the internal fibs, it's still pushing it all the way to that level would be a push, because the retracement would show us, and we can do that this way. Let me just put these in real quickly we're taking what wave E to wave D should look like, we're really looking at 0.618-ish. So it's kind of getting up to over 100%. And I might even go with that because stranger things in these markets, but I have to adhere, or at least adhere to the guidelines / rules of what the triangle should be. Now, it has been my findings that even within that triangle, a wave 3 can thrust up, die, and then nosedive right after. In this case, nosedive, because wave E can overextend or run to an extreme as it finishes, and then that failure or the thrusting back out of the triangle begins and drives the market again, then back lower in this case. So while that remains in place, it really cannot break 41.50. That resistance sits at 42.50, excuse me. That resistance sits at 42.54. Again, it can't break 42.50. It takes the diagonal right out of place. But it can get up to these channel lines, which are about 41.95, or actually 41.98 to 4,200. And that may be the intent. Now, counting it as I have right here does allow for continued rally and an easy line up to 42.54, possibly 4,300, 43.13, 43.67, and as an outlier and a C wave has 45.11, still in the realm of possibilities. And again, based on what I'm really thinking is coming and what I see developing all around it, it almost appears that the markets are getting a little bit myopic and just focusing right here and relying on what I would call the status quo. And what I mean by that is like, oh, it's earnings season, so we know all the earnings are going to be good. Oh, well, we got great earnings from the banks, from 2 banks. And it doesn't mean that, actually 3, Wells Fargo reported fairly decent numbers as well. And other parts of the market are continuing to not collapse, but cut and come down and down. What we saw on Friday afternoon, because it was expiration, was a push. And that push in the NASDAQ happened within Apple, within Microsoft, within Meta, within Tesla. Even though they were down, they rallied back to strike prices, particularly Apple, which is bound and determined to close at 165 or better, and that's exactly what they did. So, bearing all that in mind, we may have some additional, but let's remember, let's go back down to that hourly chart and take a look. We ran up and then absolutely took a dive until the noon hour, and then rallied up into the close. So here we start, back at that area where we were on Friday, but now we're stalling out again. So we need to continue to allow for additional upside. So even though here, 1, 2, 3, 4, 5. So I could say that, yep, that's the 5th wave, put it all up there. But again, I'm not going to label it because I have to leave open, well, there's the potential that it's only going to be wave 1 of 5. And here's wave 2. We get a 3 and a 4 and a 5. And the next thing you know, we're sitting up here. So I do believe we're in wave 5. But it's way too early for me to determine that that's all of wave 5, even though it's a nice, clean 5 waves. And the rejection off of it was pretty good right up until we moved into the close. And they reversed everything. And it was a mad stampede. Excuse me. Again, to move towards. And they were zero DTE options again, but they continued to hold the market in its grip. And it is where the highest volume in options is taking place. But because it was a Friday expiration, which included all of the components, it had to push a little bit harder. So what can I look for tomorrow? Well, my expectations, let's start to build some fibs. If we're going to go right from here, we have our larger C wave Fibonacci all there. Now let's put on some for the wave 4. Excuse me, the wave 5. And that we would do from here using the extensions. And we'll go from here to here and then back down to that 4th wave low over here. And from there, we start to draw our lines. Again, we're right at that 40-55 area, where we have where wave 5 would be 618 of wave 3, a common. And also wave 5 would come in as to where the other C wave, the larger C wave, would also fall into place at 0.618 of wave A. So again, we got a nice double right there, 42.55. So again, my instinct tells me that's going to be probably a pretty solid level. Above that, we have 42.75, 42.94, and then 43.13. 100% where wave 5 would equal wave 3 is at 43.45. Can it get up there? Yes. The technical potential sits tight and ready. What could drive it? Well, right now, I'm going to say earnings. And for whatever the reasons are, does it change, in my view, does it change the market's position in terms of what comes next? No. I still look at this as a counter trend rally, and that's going all the way back out to the daily. So all of this from the October lows, this is not a bullish pattern, in my view. It is a counter trend rally with a lot of bullish parts to it. I will let you know, and as we've all seen, but I don't believe that it's a new bull market. Off of those October lows, I do not believe that inflation is now dealt with. I do not believe that the Fed has to pivot. There are much larger things taking place outside of a view of only what the market wants to see. And one of them happens to be what's going on with China, Russia and the Ukraine, but primarily China towards the United States. There is a generalized, what we might call a decoupling between these global economies. And it, in my view, again, would not end well. And I would like to spend more time on that subject. And I likely will. And I'm going to try to fit in a big picture update, a podcast early in the week where I can discuss that in a little bit greater depth on what all of these components are going on and how they've been building and what does it suggest and what would be the stepping stones that are just going to eventually end up into a bad economic situation for the United States. So, or the United States and likely Europe. But I think a lot of that is already in motion and could lead to that. Remember, I've also been talking about whether we finish at 42.50 or whether we finish at 4,500. That the next decline will begin. So I would complete a primary V wave up to wherever it finishes. And the next turn is going to be a shock to the market. That's, I believe, is what will kick it off. It'll be something as strong as like there will be no questioning. Wow, this is going to happen. The Fed's going to do that, or this will happen, or we got earnings or anything else. It'll be just like, wow, oh my God, we were not expecting that, and everybody takes a nosedive. So that's still out there. How would you want to play this? Again, my point has always been is that I became a day trader because I wanted to come in each day clean, without a position, to approach the market as it's choosing to do, rather than what I think it should do. Now, my longer term counts, again, from the daily on up, have not changed in terms of this all being corrective with an additional stronger downside. What remains in flux, because it is a pattern in progress, is the actual completion points. So the market has to develop. It has to put in the various waves before we can begin to hone in on where it all should complete. And that's the process we're doing right now. Excuse me. Now, the market remains, at least on our daily, you can see that let me just open that up so we can see. The 200 flat as a pancake, rally or not, flat as a pancake, strength as it was shown on Thursday, strong rally. And basically Friday, what did it do? Put a little bit across there, but still fairly strong. Now we're opening with a little bit of questioning, but still higher. Now, so moving averages, all looking not bad. In fact, the 50's headed up and getting ready to cross the 200, which on the daily might give a boost to the rally. And if I bring it down, we can bring it down to the 4-hour, open it up. We got the same situation. Everything's still pointing higher. Bring it down to the 1-hour. What do we got? Everything still basically turning, and again, now moving higher. Over in the NASDAQ, excuse me, the NASDAQ continues to be what I would think is like the animal out there. And still working. Let me go back out to that daily for just a moment here in the NASDAQ, and I can just kind of open it a little bit. And we can see we're still working. There's the primary A, intermediate A, intermediate B. We're in an intermediate C wave. Here are the fib extensions for an intermediate C wave. So far, we've still only gotten to 618, or just above, which was 13,322. We attempted again today and on Friday to get ourselves back above 13,250. Well, we got a little bit closer. Actually, we didn't, I'm sorry to say. The high so far, today, 13,214. We still need to get above 13,253, right? Because we need to actually get above 13,350. So I would continue to believe inside. Now we're going to drop it down, come back down to that hourly. There's our, well, actually, wait, one step too far. Sorry about that. 1, 2, 3, 4, right? So we're going to go look again here to the fourth wave. Excuse me. I'm still dealing with all of that issues that I had last week. I was thinking I wouldn't start to cough. Wave 3, bizarre, strange wave 4, but still corrective, 3 wave-ish. And then we're off to a 1, a 2, a 3, a 4. Now we went up and we did that on Friday, and that could have been a 5. But here again, we may have to only seen wave 1 of 5. Right? It's clean. It's nice. Got up there. So that was the pre-market. We went up and made a slight new high after the market opened. And then we did a nosedive. Brought it all the way back down. So once again, from 13,255, the low was 13,052. 200-point drop. Lickety split. And then by the end of the day, rallied all the way back to 13,212. So the volatility in terms of movement has been pretty strong. The volatility in terms of the VIX, adding to that, because they knock the volatility down, everybody lifts their hedges and the market rallies. Excuse me. Sorry about that. They come on quick. So here we are in the same type of a situation. Is this 1 of 5 and this is 2 of 5 and now we're in the 3 of 5? If that's the case, was this 1 of 3 of 3 of 5? So again, we're going to start to subdivide. But I have 1, 2, 3, 4, 5. Now, what the market would need to do to put confirmation on this would only be wave 1 of 5, would of course to go up and break that high. And then we'll get an idea that, okay, this is 2, and now we're into the 3, and then we do a 4 and a 5. If it's 1, 2, 3, 4, 5, we're going to put a wave 5 up there, then we're looking at something totally different. We're looking at the possibility that we had a little bit of a failure. Because actually, if wave 3 is here, you'd be looking for wave 5 to break that high. So I'm more leaning towards that it's wave 1 of 5. And now and we may have already done wave 2. What also could take place is that we have an A, a B, we come down in a C, end up back down here. As long as you don't break that low, we can end up as low as 12,977 or just below 13,000, put in a wave 2, and then still rally on up. Because for it to be wave 5, we do look for it to break 13,350. Those are the current highs. And then if that should occur, what we can look for on the way up? Well, 13,457, 13,647, 14,000. And let's start to narrow that down if we can. Again, if we're just saying that this is 1 and this is 2, what can we expect? First thing I want to put in, I'm going to open this back up just a little bit, is that I'm going to put in what we can look for in a wave 5 as it relates to wave 3. Again, using the extensions. We go there, to there, to there. Now, let me take it back down to the 1-hour chart so we can open it up and take a look. And I'm going to go from this way, going to open it up. I'm going to bring this down. Oops. I want to open it up and then bring it down. So what we have, if this is 1 of 5, 2 of 5, we're in 3, right? 3 of 5. Right now, what I put in is where we believe wave 5 can get. Wave 5 would be 618 of wave 3 at 13,699 or 13,700. Is that really a possibility? It is. Technically, it is. Could the market do it? Yeah. They're very, very excited about jumping in on this stuff. They're very excited. I mean, we don't see Apple's earnings until May 4th. We have the Fed on May 3rd. We're getting signals from other places that are basically saying, sell that next Fed hike. So there's going to be a lot of mixed signals. We have some of the bigger players that we got going on. We have Meta reporting on the 26th. We have Microsoft reporting on the 25th. We have Tesla reporting on the 19th. It's next Wednesday. So we're going to begin to see, to put this picture together, Netflix on the 18th, which is Tuesday. So we got Netflix on Tuesday, Tesla on Wednesday, NVIDIA is even later in the cycle. We have Microsoft on the 25th, Metaverse on the 26th, Honeywell, which is part of the NASDAQ, at the 27th. We have Apple on May 4th. AMAT hasn't announced yet. We have AMD reporting on May 2nd. So against the larger players in the index that I'm watching, right, the ones that I follow very closely, we have some reporting next week. That may give us additional direction. What we think Tesla's going to do, what we think Netflix will do. If Netflix decides it's going to blow the door off again like it already did, well, we shouldn't have any problem getting to 13,400, nor should we have any problem getting even higher. But again, my opinion or my count is not going to show that we're in a new bull market. I will continue to hold to what I see from the October low as being corrective, a corrective larger B wave. Now, let me add one thing else about all of that. If I come back out here, we have an ABC x ABC for primary A. Yes, that still does and will leave the door open for an ABC B wave actually going up beyond, being more irregular. And that would suggest we get a massive rally right now. But I'm going to tell you, even if that happens, even if the NASDAQ puts in a new high and in a regular basis, it's still within a corrective pattern. Now, how would you want to trade that? Well, yes, of course, I will be long through much of it. I will be trying to catch all those rallies if they should occur. I'm not looking for that. I'm not sticking to the status quo of like, well, earnings always blow the doors off. They're always expecting these great earnings. I think we need to take into consideration what actually is happening, how we had a slowdown in retail sales, how we've had production problems, how we've had surprises from our market. And that a lot of it has come in tech, and how they've been actually selling tech ahead of earnings versus buying them. Doesn't mean that's the right move. Don't get me wrong. I'm just including it in how I'm going to view this market. So basically, getting right down to that bottom line for tomorrow, we have two choices. We could do a quick run back down, get below 13,000, finish a wave two, and then start to rally yet again. So it could be that way. And I guess I want to put it out this way because I want traders to understand that it could be like, oh, yep, it's giving me signals. It's all over. It's going to nosedive. And then suddenly it stops and we get a rally. Keep in mind what the possibilities may be. 1, 2, 3, 4, 5, wave one, ABC, wave two, and a rally. And if you can organize your position or just be more nimble with your position, if you've got a core short that you like, you may choose options in many of the products. Get some calls, put on something that's going to be advantageous if the market should rally strongly. So there are ways to continue to trade profitably and make adjustments to existing positions without having to change the whole core. So again, for tomorrow, I'm going to have to wait. We're going to have to wait and see what the rest of the Globex is going to do prior to we coming back in tomorrow morning. But we still have upside left to do. That would be my opinion. What's going to suggest that this is a failure? At this point, it would have to really just fall and continue to fall. That would be it. Because we've seen too many times before where it gets this close and you can declare it a failure, but it would be a much bigger failure at this level. Then what it would be finishing is much bigger at this level. It would be completing up to a primary degree. And that would suggest something very, very strong to the downside would begin and happen. And again, there are too many choices to realize about how that could come about. And again, the same thing remains. There are a lot of things, but I believe this one, or what I'm seeing going on geopolitically, they continue, I think, to be the ignored side of the market. Because for whatever reason, it doesn't seem people or traders don't think that that's what's going to affect our U.S. markets. But the global economy and the decay of the global economy and the decoupling of China will hit the United States extremely hard. And to think that we're the stronger and we're the greater and we're this and that is just not going to fit. Trust me, what's going to happen, they're not going to care that we all think that we're the number one country in the globe. It's not going to be the problem of the current administration. If anything, it's going to be the last administration plus this administration that are basically laying the foundation for what is being called the Great Chinese Decoupling. So I hope to put something together where I can be able to put a little bit more detail and take a look at the different products, the different things, the different sectors that are going to truly be affected. The U.S. dollar would come into play, big time. U.S. dollar would come into play. The bond market would definitely come into play. Treasuries would be right out there front and center. And we're already seeing how they are getting some downdrafts going here. There's some great rallies we've seen in the 30-year bond, only to be crushed and turned lower. So, and it's basically just opening unchanged. So those are part of the warning signs to me of like, whoa, you better pay attention. Something may be up. Yep, we got all these earnings. Yep, we got this stuff going on. Something may be up. And these earnings, which are history, not moving forward, they're history. So to make a big size move on history against what's happening here you have today is going to be the choice of each market maker, each dealer, and each trader. So let's take a look on what's going on. If we're having some downside, we're going to have that different support. In fact, I probably could open this a little bit just for some definition. And again, we're going to talk that was the high. We're likely not going to get above it if this is going to be an ABC from there. And now we're looking at a C wave down. Well, first of all, we've been looking for it to come below Friday's lows, which was 13,058, maybe down to 13,017. Excuse me. And then again, here we have the next level down, which is just 12,980. So it's not from where we are. Yeah, be a nice tumble, but it's not going to break the pattern and then still rally. That was a mighty powerful little rally we had there. And if it's only wave one, wave two can retrace almost all of it. But even down to here, we're looking at the C wave within wave two of just being 100% of wave one, of wave A. Right? A of two, B of two, C of two. Rally above. So if I take that off, and now I just start to put on, and maybe that is all of two right there, and we're beginning to rally from here. Well, how does that look like? Then we'd be looking like here we have wave one, wave two, and now we're looking for a third waves as compared to wave one. It's got to be a minimum. Then we're looking at 13,387, which again breaks that high. That's what we're looking for, and a third wave, but we're looking for it to go even further. Then we have our next level is 13,465, then 13,513. Wow, now we're getting up there. 13,585, 619, etc. Excuse me, it's the tickle in the throat. And now we're sitting up where we're in the very high level zones. 1.618, or wave three would be 1.618 of wave one. Bingo, 13,591. Can we get there? Yes, technically it is possible. A lot of those companies better give us some good earnings. We better have some decent economic figures, etc., etc. There should be a catalyst. Then we can start to play against zero DTE options because they will also have their own control. Moving averages all still in the same, pretty much same places as we, oops, didn't mean that. As we have seen, I'll start here on the 4 hour. We got the 200s, they're kind of angling up. The 50 kind of flat because of Friday's action. The 20, the 4, and the 8 all pointing higher. Breaking it down to the hourly chart, open it up, same deal. But basically in alignment. The 4 hourly chart is definitely in alignment. 200, 50, 20, 8, 4. In alignment to go up. All right. I am going to finish it up there. Our next update will be on Monday, April the 17th.